Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 11th, 2023. Hope you're all doing well. In this segment, let's take a look at how to trade this overbought market and how to profit from it. Look, from a market perspective, we got here S&P 500 cruising along pretty well as you can see here. There's a 1 year chart and we got Nasdaq is really jumping very high as you can see here with all the craze about artificial intelligence. And we got here Dow Jones Industrial Average also going higher, still in the trading range. Then we got Russell, which is slightly weaker, but still look, Russell is also going higher. So in this market, let's take a look and see how to trade and make money. And with that, let's jump into overall market condition here, and let's go into one of my favorite tool here, which is CNN Fear Greed Index. Look, from a fear and greed index perspective, we are squarely in the greed mode right now, extreme greed mode. The moment you are in the extreme greed mode, you gotta be slightly careful. Don't buy aggressively when you are in the extreme greed mode. Instead, look at saving some money, having some cash readily available, because this can oscillate and come down to even greed mode or a neutral mode. In general, as you're in the extreme greed mode, we are due for a small correction or a small pullback. Look, we got a binary event coming next week with the Fed talking about the interest rates. If there is some hawkish tone in the Fed comments, we can go all the way back to the greed mode or even to the neutral mode. That's why next week, I think it's June 13th, is a very critical binary event we got to be careful about. So with that, let's jump in and see how to make good options trades in this market and make profit from it. So I will go to one of my favorite tool here, which is finviz.com. Look, in the Finviz, I got some simple criteria. I saved these criteria. I got Finviz Elite, as you can see here. If you're interested, you can go and subscribe to Finviz Elite, but you should be able to see most of this in the free version also. I love Finviz Elite mainly because I can create my own custom view, and I can select what I want to see, and also I get some custom filters. As you can see here, each of this has got a custom filter. I can select what I want in this custom filter. That's why I like Finviz Elite, and also it gives you real-time price changes. That's another reason I like Finviz Elite. So with that, I got a screener here. Look, I basically said I want market cap between 20 billion and up, because I don't want to look at smaller cap names in this in this overbought market. For an options trading perspective, I want liquid underlying. And then I said price more than $30. Again, I want a little bit stabler stocks here, and I want stocks to move. That's why average true range about 0.775, meaning in the last 14 days stock should at least move 75 cents on an average on a daily basis. Then I got here average volume over 90 days above uh, above 5 billion, above 5 million shares traded. As you can see here, I got volume here. I want at least 5 million and up on a 30-day basis. And then I got here stocks only. As you can see here, we'll do stock to begin with, and then I got here current volume at least over zero, meaning depending on what day, what time of the day you run, I don't want the screen to give you zero records. That's why I just left it as it is. You could say any. So this is simple criteria. I also saved my criteria. Normally, when I look at trading the market, I go into my the usual filter. This is the usual filter that I have. This is what I use for my normal options trading activities. Look, top of the list is none other than Tesla here. One of my favorite trading stock here. Look, it's up nicely. And look, Tesla, look at Look at the RSI right now here. RSI perspective, it's overbought. Look at 85 RSI, tells you it's very overbought at these levels here. And then I got few of my favorite stocks at the top of the list here. AMD, Amazon, Apple, Nvidia, all most of them are overbought, as you can see here just by looking at the RSI. But Tesla is completely overbought with the RSI 85. Anytime RSI is above say 70, it's overbought, but if it's over 80, it's too overbought. So next what I would typically do is I go into my chart mode here. Look, I love Finviz for this reason also. They have a nice view of the chart. The moment you have a chart here, right now I'm in a daily mode here. Look in a daily view here. Look by looking at this here, Tesla is going up nicely, as you can see here. Nice uptick. Look, and RSI perspective tells you it's overbought right now, due for a pullback. Look, when it happened over here, overbought, we had a nice pullback, as you can see here. So as you can see here, same story with AMD, again overbought at this time here, and RSI perspective is 66. So you got to be slightly careful in these territories. So if you have Finviz Elite, you can also change here. Sometimes you want to look at a weekly view. You just click on weekly here. Look, you get a nice weekly view of the chart here. This kind of can give you a little bit broader perspective. And by looking at this, you could see here Tesla is going up very well of late. But as you can see here, look, 300 level here is a level in the sand. As it takes on 300 level, you can expect some turbulence and resistance. And you could also think about the 250 level here. This could be also a resistance level. So you got to be watching out at these levels very carefully. Look, AMD is again, it's taking over its resistance level from the past here. So again, due for a pullback here. On the other hand, Amazon.com here, it's trying to make its way higher, as you can see here. But still, this can also act as a resistance, especially when Fed comes in next week and talks about, if it talks hawkishly about, if they talk about that maybe a rate increase this year, market can come back here. Apple completely overbought here. Look, Apple is completely overbought. You can basically look for a pull back here at these levels here. All right, so you could also do a monthly view here. This is one of my favorite here. You get a good idea by looking at here monthly view. Look, Tesla, um, the moment, look, there is a nice trajectory here. The moment it hits these levels, it can pull back here. And on the support perspective, look, there is a nice support level just above 100. So it could be kind of trading in this channel, tight channel, as you can see here. AMD also same story. Look, that there is a possibility it might hit the resistance level and come down here. Nice support here around say 70 80 level here. That can be a good support here. On the other hand, Amazon.com can go slightly higher, but it might also hit the resistance level somewhere around 140 range here. So it's got some more room to run, whereas Tesla is completely overbought. Same is the story with AMD and Apple, as you can see here, even in the bigger monthly chart here, it's hitting the resistance level. That's why I'm being slightly more careful here, and I'll be looking at strategies to really make profit in this market. All right. So one more thing I would take you back to is really in this platform here, think or swim here. You could go here. One of my favorite way is to look at skew here. Skew is also a good indicator. I got here 3 grid view here. So it tells me from a S&P 500 perspective, look, there is a tight channel here. It's hitting this resistance level, as you can see here. It can hit and come down. That's why I'm slightly more careful. Look, skew is one of my favorite indicator in think or swim here. So you could look at skew. I got a 5-year view here. Look, the moment skew hits on the top here, about say 160 or so, promptly market comes down here. Look, it came down. You can see here correction here, skew hit high over here. Then we had COVID-19 happen, market came down, and look, it hit high here, market came down, and now we are right here. Market is going up as usual. When the market is going up, VIX hits high. There's a very good chance that market can tank and take a skew along with it. And one more thing is VIX here. Look at this VIX, which is a fear gauge. There is no fear in the market right now. VIX is one of its lowest levels here at 13. So this is another reason you got to be careful here. The moment VIX is super low like this for a while, market will look for some opportunity to come down. That's why you got to be slightly careful at these levels here. All right, so having said that, let me go back here and see how to trade some of these things here. So, one of my favorite things to trade if you do want to trade the stocks is to go after, big indices. We've been talking about this for a while. For example, I love SPX. So if we go here, go to SPX, for example, here, let's do one thing. Let me save this one here. So let me save this. All right, I'll call it stock here, and we'll go into some of these big indices here. Look, let's go here and let's go to ETF. Look, SPX, we got S&P 500. This is one of my favorite instrument to trade. Right now, SPX is around say 40, reaching 4,300 pretty soon here. So I would be trading mainly selling puts at the bottom here and selling calls at the top. For my puts here, I would go with the delta say 15 on the short strike here, and on the calls I would go to delta 10. So that way, I'm a little bit I'm risk aversive that way, not super aggressive. This is the trade I would take all day long. So if I take you to trade tab here or put SPX here, I would typically go 45 days. In this case, look, we got here. Let's keep going down here. Look, we got 39 days. You could go here, or you could even go to 67 days. 67 days is a little too far for me, but I also go into 67 days for these indices like SPX here. If you go to 39 days here, so you could go here and keep watching the delta. So I would go here to delta, say on the put side, I would go to delta, say 15 or so. Let's keep going. Look, we got delta 15 right here. Look at that open interest. This is what I call a open interest wall. This tells me the market maker wants to make sure price stays above 4,100. That's why there is a nice and high open interest. And also pay attention to this one right here at the top here. This tells you there's a 14% chance, there's a 14% increase or decrease in SPX by July 21. So you keep that in mind. By July 21st, SPX can go higher by 168 points or lower by 168 points. Keep that in mind here. That's one of the important things you have to think about. That's the, basically it tells you what's the market maker move. Market maker expects this SPX to go up or down 168 points by July 21. So you could basically do one thing. You could sell spreads, or in this time you could even sell iron condor here. So you could go here and sell, and you could go into iron condor. And if you're selling iron condor on the put side, we are right here 4,100. Look, we got 4,100 already. And we got to look where to buy. So look, we got very good open interest right here, 5,055. Again, a good open interest wall. So I would go to 4,075, where you buy back. You're selling 4,100 and you're buying back 4,075. A $25 wide spread here. That's good enough. Look, that's on the put side here. On the call side, because market is going up, you got to be a little more, little more conservative and go around delta 10. Look, we got delta 11 here, at 4,500. That's good enough. Look at the wall here. That's a huge open interest at 4,500. I would go here to 4,500 for your short call strike. So let's go here to 4,500 on the short call strike here. Go all the way down here. All right, so we got 4,500. And look, if you want to buy back here, look, we got open interest as you can see here. We got good open interest here. Even it look $25 wide here, 4,475. That's on the lower side. We are on the call. We are to go on the higher side to buy. So you could go here, 404500, 4525. That's good enough. Look, there's a nice and high open interest here. You could really buy back at 4525, taking a $25 wide wing here. So you could go here 4525. All right, so right here, look, we are doing a nice iron condor. We are basically being a little more careful on the call side here because sometimes market can keep going higher. That's why we are at delta 11 on the call side. On the put side, we are at delta 25. Look, you can make $45. Sorry, 4,435 dollars here, and it's a credit that you will receive. So you could confirm and send this here. It's a good one here. And you could also do one thing. You could go into an analyze trade here with the think or swim here. I would deselect all these things here, and let's select these. Okay, good. Let's go back here to my iron condor, and let's do one thing. Let's go here to set slices to break even by 721, and the date you got to change this to 722 just after expiration. Look, we got a nice iron condor here. I love this. I could take this trade all day long. There's a 69% chance of this iron condor making money. That's very good. 69% is a nice probability of profit, as you call it. And break-even points are right here at expiration. We got lower break-even point at 4098. As long as the stock stays above 4098, you will break even. On the higher side, on the call side, we got 404505 as the break-even point. As long as the stock stays or index stays between these two, you will keep your money. And look, it's a very good trade here. And for now, the blue bar here, the blue line, this is the profitability at expiration, and the red line right here, this is really the break-even point at expiration. The purple line here is the the profitability right now, and the red bar right here on the purple line, this is the profitability right now as of today. So that's why I would ignore this purple line for now, and these red bars which is as of now, because this purple line will shape and mold, and basically they will be going into this blue line here. That's why for all practical purposes, you can ignore the purple line here, and the two red bars on the purple line, which is really the break-even points on the lower side, break-even point on the upper side. As of now, I would ignore it and focus on the break-even points on the blue line here, because blue line is the line that will be shaping as we go into the expiration. And I would also look at probability of profit at expiration by setting by looking at this one here. So that's a good way to keep on putting your high probability trades to make profit. I would do same thing for the NDX and RUT, so that way you're you're getting some good profitability every now and then. I mean, consistently, I would mean. So this is about SPX here. Sometimes you might wonder, hey, where should I get some of how to take some of these high probability trades. Things like SPX, NDX, RUT, you could do day in and day out. Don't need to worry too much. but some of you want to put on some speculative trades. So for that, typically what I would do is I would go into one of my favorite tools. It's the barchart.com. So in barchart.com, look, I got a free version here. You could go into free version, or even their premier version is pretty good. You could go into premier version. You don't need to pay too much money. It's around $16 per month, which is a good investment. But because I trade mainly these big ETFs and I know what I'm doing, typically I don't subscribe to this from a premier, but I might consider subscribing just for the ease and to get rid of this advertisement. Look, from a stock perspective, I got my filters. If I go to my filters here, look, basically I'm saying I want 1 month average to be more than 5 million shares traded. From a stock perspective, I want market cap to be over 30 billion. I want open interest to be nice and high, over 500,000, as you can see here, and I want the price to be more than $30. When you trade options, you got to be looking at the liquid underlying. You don't want to go after penny stocks, which is not worth your while. So very simple criteria. And with that, I got here my, I got my results here. If I go back to my results here, look, this is my results tab here, and I could go change my view. You can create your own view here. I got my stock option view. That's my go-to view here. Look, as I go into this, I would basically sort by open interest in a descending order. Look, top of the list is none other than Tesla, my favorite trading stock here. I would not buy too much of Tesla in my retirement account, but look, for trading, I love Tesla mainly because look at the open interest in Tesla, so high, 9 million open contracts held by traders. That's very good here, good trading stock. And next we got Apple and so on and so forth. But also pay attention to Tesla's RSI here. Look at the 14-day RSI, it's 85. That tells you it's overbought. Look at the 5-day RSI, 98. That tells you it's even getting more overbought. So with this, I would basically do multiple things with Tesla. One thing I would start doing, if I go back to my thinkorswim platform here and bring up Tesla chart here. Let's bring up Tesla. I would go into my stock view here, one good stock. I would bring up Tesla. Look, Tesla perspective, I got a 5-year weekly chart of Tesla here. Look at the chart, it's all over the map here. Tesla has been look, aggressive growth here, went up too much, hit the ceiling, came down again, one more leg up, and from there onwards, look, Tesla has been trading in a downward channel, as you can see here. There's resistance level at the top here and support level at the bottom. It hits the support, jumps up to the resistance, comes down, nice tunnel downwards. So I would expect something similar here at this 250 mark here. Look, it's trading around 250 right now, 244. I could see it bumping to 250 here, somewhere in the 250 right below 260 here. I could see that bumping there and coming down. But for some reason, if Tesla goes slightly higher, there's a very good resistance level at 300, as you can see here. There's a chance it will come down. With the Elon Musk at the top, he will make some comment on the Twitter that can push the stock down. That's why at this overbought level here, I'll be looking at Tesla. That's a nice trading stock here. So I would be looking at basically selling some call options at the top here, and selling some put options at the bottom, and make some consistent profit that way. But if Tesla comes down, I would be basically, selling some call options at the top, and buying some call option at the bottom. It's at the money here, so it's an in and out play. I will talk to that in a minute. So with that, let's jump into a smaller chart in Tesla here and go from there. So I will go into my smaller chart here. Let's go into Tesla, and I would say 1.5. Let's go into this one here. Look, Tesla, I got a few things going on. It's slightly busy as you can see here. I will talk through this. I got a stock chart here. I got Bollinger Band. From a Bollinger Band perspective, look, Tesla stock went above its upper Bollinger Band, consistently for a few days here. Anytime that happens here, look, it went up somewhere. Look, it went above the upper band, came down here, went above the upper band, and came down. Right now it's way above the upper band. I'm sure it will come down here. And look, we got Tesla here from an RSI perspective. It's above its RSI band here. Look, it's completely overbought above 70. So due for a pullback. And look, from a selling premium perspective, its implied volatility right now is above its historic volatility. The implied volatility is the blue line here. Historic volatility is the purple line. It's above its historic volatility. And the IV rank is 32. In the current market, this is a relatively high IV rank. That's why you could sell some premium in Tesla. All right, now let's go into the trade tab here and bring up Tesla. I would go here. We will do the same thing on Tesla also because it's overbought here. You could go here and you could go at say 15 here. 16 is good enough. Look, at 14 at 200, there's a nice and high open interest here. It's the open interest wall. I would consider this as my short put strike here. So I would go here and sell an iron condor here, right here, and my short strike is 200 as you can see here. For the long strike here, where to buy back, you could look at maybe a $20 or $25 wide here. Look at 220. We got 27. I think $20 wide is good. We got nice open interest, 5,000 at 220. So I would buy back at 220 here. Actually, we have to go down. I would look at down here 200 and 180. Look at 180 here. Nice open interest. I would buy back at 180. So let's go here and do a 180. There we go. We got nice $20 spread here. On the call side, you got to be conservative with the Tesla. With the leadership of Elon Musk, things can go up and down. So look, I would go here to very high open interest at $350 here. That's good enough. It will give us enough room here. I would sell the call at 350. That's about $100 or so above current price here. So my short strike is 350 here. So let's go here and do 350. All right, so we got 350 here, and we have to buy back. Look, 375. Look, 375. We got okay open interest. Look, nice open interest here. I would go here to 375 and basically buy back. Let's go here, 375. All right, right here. Look, it's a nice credit here, $278 credit. We could do this and send it, confirm and send, and you get a nice $278. Your expiration date is July 23rd. You could also go here to analyze tab here, analyze trade, and look, we could just remove all these things here. All right, let's go back here to our Tesla Iron Condor right here, and I would go here to set slices to break even 722. Change this to 722. There we go. And look, this one is a little wide iron condor. That's why it looks like this. You could go here, click on right here, and go to fixed Y scale, and click on it. And now you could just pull this, click on one of these numbers here, just to grab it and pull it. There you go. Look, it's getting better now, as you can see here. And once you see something like this, you can put your cursor right here and just center it. Look, it's a nice iron condor, as you can see here. Look at the chance of probability of profit, 80%. That's a very good probability of profit. I would take this 80% anytime. And look, as long as Tesla remains within 197 and all the way right here, let's see here, where is my other, let's go back to set slices here to break even. All right, look, as long as Tesla remains within this 197 on the lower side and 352 on the higher side, I would keep my money here, which is $278 credit that I received. It's a very good strategy here. I would do this all day long. For the daredevils here, I know many of your daredevils. I also suggest one more thing, but look, this is very little more risky here. What you could do is you could sell Tesla short. That's one of my favorite strategies when it's completely overbought. You could go here and sell Tesla short here at about you could in the current market around when it reaches around 250 you could sell Tesla short. So the moment you sell Tesla short, you could do something called a covered put strategy. In the covered put strategy, one thing I love about covered put strategy, once you sold Tesla short, that means you borrowed Tesla shares from the broker. There is a small margin and borrow fees that you have to pay, which is not too much. Once you do that, then you could sell monthly put options. Look, right now, if you see here, you could go here to Tesla 244. You already shorted the stock at 244. Then you could go into Tesla, look at every week you could sell put options here. Look around again, look for a very high open interest here, 240, very high volume here. And look, it's a very super high volume here. So the moment you sell the stock short, now you could go in and sell a put options here. It's called covered put. You can make $520 here because you already have shorted the stock. You don't need to worry about any maintenance amount or collateral. It's going to be your short stock is your collateral, so you could make $520 if you sell Tesla a weekly put selling. You can make 520 if Tesla stays above for $240. It would expire worthless. You can keep your 520. And if Tesla stays above 240, you could consistently do this strategy week in and week out. You could go next week, 2 weeks out. Once this expired, go to 23rd and look for very high open interest as usual. It could be by looking right now. Look, we got open interest and volume right here. Well, 240 still, as of now, it's still high. You could keep selling this weekly put options once you shorted the stock and keep making consistent profit. This is another one of my favorite strategy, which is basically put selling put options called covered put once you shorted the stock. But look, be careful when you're shorting the stock. It's not for everybody. It's for daredevils, and it also helps when the market is completely overbought. So with that, some of you may not understand Thinkorswim or may not have Thinkorswim. You could go into one of my favorite platform called optionstrat. It's again a great platform here. You could go here and you could build iron condor like we talked about, and you could put in Tesla here. We talked about Tesla. You could go here. It's simple and intuitive. You could go into July 21st like we talked about, which is 41 days out, and you could go here and sell iron condor. You could go to build, and we already said iron condor. On the lower side here, you could go to 200 as we talked about. Look, 200, and you could go to 180, 180 right here. On the call side, we talked about all the way to 450. You could go here to 450. You're you're basically shorting, buying a put option at 450, call option at selling a call option at 450. You're buying back a call option at 475. All right, let's go back here to Thinkorswim. Make sure that's what we did. All right, so we are right here. We did 375, 350, 375. That's why it's thinking. Let's go back here. So it's at 350 right here. We are shorting or selling the call, and 375 we are buying right here. Look, it's a nice $279 credit, and just go here and just pull this. You can see the whole iron condor properly. It's a nice trade here. If you don't have Thinkorswim, or if you are not familiar with the Thinkorswim, the trade analyze trade tab, this is a great tool, option strat. I love this tool. It's a great one. You could just look at this and look. There's a chance of profit, which is 84%. There is a slight difference between Thinkorswim and option strat because the different algorithms, but it's a high chance of profit as long as Tesla stays between 197 on the lower side, as you can see here. On the higher side, 352, which is right here, you would make money. You would make $279. A great strategy in this market, and I recommend you to look at delta 15 on the put side and around delta 10 on the call side, just to be careful because you don't want stock to keep going up and hit your short call here. That's why it's always good to look at call short strike at these levels here at around say delta 10 or so. So with that, thank you very much. Happy investing and trading. Please subscribe.